This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website.
Hello, this is Hall March with Investor Connect. Today I'm here with Gary Nacht, co-founder at Sterling Advisory Services, dba CAFÉ Central. Sterling Advisory Services, CAFÉ Central advises troubled and underperforming companies, helping them return to cash flow positive, acquires corporate orphans, and helps pre-revenue and early-stage small and medium businesses use the CAFÉ to raise capital. Gary, thank you for joining us.
Glad to be here, Hal.
Great. So what was your background?
I graduated from Wharton back in the mid-'70s. That seems like a very long time ago. Started a very traditional finance career. Went to work for what then was one of the big 8 accounting firms, Deloitte, became a CPA. And then, as happens with so many of those folks that follow that path, I was hired into private industry. I was either CFO or VP finance for 3 separate companies, privately owned. Took the third one public. And then I was recruited by a gentleman who was in the turnaround business. He had acquired some very large distressed companies and was looking for someone to partner with him on his next deal. And I was still very young at the time, very excited about the opportunity, and I joined up. I became a partner of his, and we went after our first deal, which was a $1.2 billion retail chain. And we acquired Kmart Canada back in 1997, and that put me into the turnaround business.
Great. So what inspired you to create this new investment structure?
Well, I've been doing the turnaround stuff for, over 30 years now. And about a year ago, my brother, who's a securities lawyer and a commercial attorney, was approached by a young startup company that had developed a new type of convertible equity security that nobody had heard of before. It's called a CAFÉ. It stands for Continuous Agreement for Future Equity. And it's a remarkable security. It essentially took all of the good parts of convertible debt, safes, and crowdfunding and recrafted it into a new security that avoids all of the pitfalls of those other forms of fundraising. And my brother was invited to be the conduit between this technology company that invented the security. And my brother asked me if I would join him in teaming up to help clients do that.
Great. So can you tell us how the CAFÉ works?
It's a unique thing. It's a convertible security, but unlike a safe, which has unknown dilution until a future financing round, a CAFÉ has fixed dilution that's set up front. Another especially valuable feature of a CAFÉ is that it has a liquidity component. You know that if you're an investor in a safe or a convertible note, you're basically waiting for a future conversion event. With a CAFÉ, if you buy into the CAFÉ tokens and you hold them for 12 months, they actually are on an automated secondary market trading platform, and you can sell them. So investors have the option of holding onto their CAFÉ units, or if they choose to, they can sell them to other investors.
Great. Who's the primary user for it?
These have all been early stage companies. These are businesses that are either pre-revenue or mostly in the $1 to $10 million revenue range. A common denominator so far is that they all are in some way related to or built on modern tech. So some of our clients, for example, have developed live HD streaming platforms that bring a lot of people together. We have companies that are using modern tech to help traditional companies that want to be involved with cryptocurrency and blockchain. They've developed applications that allow traditional companies to bring in crypto and blockchain into their normal accounting and finance system. So most of these companies, one common trait is there's something modern, very modern about them. The other thing is that they typically have some sort of following, either a large customer base or a large social media presence, because one of the unique aspects of a cafe is that unlike a safe or convertible note that essentially is designed to bring in a small number of large dollar investors, cafes are designed to be widely held.
And who else can benefit from using it?
It's really, there's two sides to the coin here. Investors, if you go to our website, cafecentral.us, we've designed this to be a bit of a marketplace. And on that website, you can see, for example, 9 companies that have already launched a cafe. You can see what kinds of companies there are, how much money they've raised, how well their cafe is doing. But it's also designed for investors who are curious about the cafe, maybe even looking for what kind of companies an investor could invest in. You remember, from an investor's point of view, whether it's an angel investor or even a VC fund, that liquidity feature is pretty powerful. So if they're looking at a series of alternate things to invest in, having a liquidity or exit option on a cafe, I think serves a good purpose.
So what surprised you the most when you implemented it?
I think the most difficult part of it is that some of the components of it are upside down thinking. So, for example, we're accustomed to thinking that the more money that's invested in a security, a company's security, the larger dilution follows. So with a safe, for example, you know that while you may expect the money raised to dilute the owners 10%, it could be as much as 20 or 30%, because you don't know what that conversion rate is until there's a follow-up round. One of the things that's surprising and takes some getting used to is that regardless of how much money is invested in a company's cafe, the conversion or that dilution percentage stays fixed. And it can take some business owners a bit to get used to that.
And so what was the most important benefit you found in it?
Well, for starters, it's a quick process. Not so much early on, but now that we've had so much experience with a cafe, we can have a client up and running in 4 to 6 weeks. That's pretty quick. And the cost of it also is pretty low. Depending on whether you go with the boilerplate version or you go with a fully featured version, the brackets on that cost start as little as $8,500 and doesn't go higher than $19,500. And the difference between that high and low, Paul, is really mostly having to do with how many features you want to bundle into your cafe. That's one of the nice aspects of it, which is you can go boilerplate or you can add features to it. Things like using cafe tokens as an alternative to a stock option plan, or using cafe tokens to pay professionals. We're starting to see growing acceptance on the part of professionals to take some part of their fees in cash and some part in tokens because they get an upside attached to it. So again, if you want the more features like that you add to your cafe, the more costly it gets, but never goes above $19,500.
What changed the way you thought about it so you came up with these non-conventional features?
Well, it was designed that way from the start. The fact that it is a convertible security with fixed dilution, because it is filed under a Reg D exemption, a safe harbor exemption, as long as you meet the rules of the SEC, you can incorporate as many features and characteristics as you like. In fact, a lot of what we do when we work with clients is we walk you through each of the individual options. We present the alternatives, the pros and cons of each. And eventually we get through all 15 or 20 of those discussions, and you have a cafe that works exactly the way you want it. A quick example, with a safe, and I always go back to compare it to the safe because it's closest relative. With a safe, typically the conversion events or the triggering events are an IPO or a sale of the company or liquidation, dissolution. With a cafe, you can have all kinds of creative triggering events. You can have subsequent financing rounds. You can have change of control. You can even have anything that changes the cap structure of the cap table. If you decide to do a cafe and a safe, you can make the safe event a triggering event for the cafe, meaning that safe investors can convert into cafe tokens if they prefer the liquidity option. So all kinds of very creative solutions like that.
Well, so based on this experience, what do you consider doing next?
Well, we're just starting to grow. We built our website. We're starting to get a lot of traction. We just recently started to begin a more serious campaign to let everybody know about what a cafe is and what it can do for them. And so what we've done is we've bundled our services really into a business advisory component where we walk entrepreneurs through the cafe and the structuring of it, the valuation that needs to be done. At the same time, we are making it an easy process for an entrepreneur, unlike other like convertible notes and safes, which have a lot of negotiation involved for each individual instrument, things like preemptive rights, dilution rates, and so on. A cafe is quite simple. You make all those decisions up front with our help, and then you launch it, and it's done. It's very low maintenance. Just so you know, a cafe doesn't have, for example, any financial reporting obligations. There's no 8K, 10K, 10Q filing that's necessary, nothing like that. And unlike a safe or a convertible note, there are no governance issues. You don't have safe investors with preemptive rights or approval rights on certain things that you want to do with your company.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, just to let folks know where they can get a hold of us. I mentioned the website, cafecentral.us. We also hold quite frequent small group presentations about the cafe. We have a webinar that runs between 30 and 45 minutes. It's a lot like this is, interview style, but of course we go much more in depth than we talk about the mechanics of it. We talk about a lot of the features that you can choose to incorporate into your cafe. So that's one thing. Reach out to us, sign up for one of those webinars, and we'd be happy to talk to you about it. I would also encourage people to think about it as a supplement to anything else they're doing. If a company is already down the path looking at a convertible note or a safe, that's okay. Keep down that path. But because that's, again, focused on a small number of large dollar investors, we think that a cafe is highly complementary to that because it will typically be the reverse. You'll have lower dollar investments, typically in the 5 or 6 digit range, but you'll have a wide investor base that will be following you. I interviewed yesterday a cafe with a company called Gilded. They just crossed the $900,000 range. They just raised $900,000 with their cafe and still growing. And he told me, which I was thrilled to hear, which is that most of their investors are their customers. So it's really an extraordinary way for your community, your followers who love your product or services to also become an owner.
Great. We'll include your contact details in the show notes, I should say. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Be happy to. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.